There's a force in our world so vast it touches nearly everything you own, use, or hope for. It operates quietly from the skyscrapers of global finance, its influence rippling outward to your morning coffee, your retirement savings, and the street you live on. This power has a name, yet for millions, it remains a whisper. It is a silent partner in the global economy, a firm that has amassed more wealth under its management than the annual economic output of every nation on Earth, except for two. This is a story about control, about influence, and about a company woven into the fabric of our lives. It's not just a Wall Street story, it's a Main Street story. It shapes the price of your groceries, the interest rate on your mortgage, and whether your employer expands or downsizes. When you deposit money into a pension fund, you're likely handing it over to this entity. Local governments turn to it for funding bridges and schools. The decisions made in its boardrooms echo through communities, affecting families who may never hear its name. The distance between high finance and your daily life is shorter than you think. The name of this firm is BlackRock. With over $10 trillion in assets under management, it is the largest asset manager in the world. But its power comes not just from size, but from quiet indispensability. Its rise was methodical, strategic, and almost entirely behind the scenes. How did one company become so central to our world, and what does it mean when so few are watching? To understand BlackRock's power, you must first understand what it actually does. BlackRock is an asset manager, a steward of other people's money, from pension funds to insurance companies to individual investors. Its job invests that capital to make it grow. BlackRock is often the largest single shareholder in the world's biggest corporations, giving it immense, albeit indirect, influence. It has voting power on shareholder resolutions, swaying decisions on everything from environmental policies to CEO pay. Through its financial markets advisory group, BlackRock consults for governments and central banks, especially during crises. After the 2008 meltdown, the U.S. Treasury and Federal Reserve turned to BlackRock to manage toxic assets. This dual role, as both a massive investor and a key advisor, creates a situation many find unsettling. BlackRock maintains it has strict internal firewalls, but the perception of conflict remains. It sits at a unique intersection of public power and private profit, operating in a gray area few can fully comprehend. Every giant has an origin story. BlackRock's began in 1988 in a single room with 8 partners led by Lawrence Fink. Their vision managed money differently, with a focus on understanding and managing risk. Wall Street was driven by instinct. Fink's team wanted data and analysis. Their big break came from mortgage-backed securities, developing models to analyze their risks. They became so good at it that other institutions paid for their expertise. This foundation in risk management fueled early growth. The next leap, acquiring iShares from Barclays in 2009, transforming BlackRock overnight. iShares exchange-traded funds made investing accessible and affordable, attracting trillions from ordinary investors. BlackRock became the default investment vehicle for the masses. Its expansion into passive investing was a masterstroke, matching the market instead of trying to beat it. As its assets swelled, so did its ownership stake in corporate America. What happens when the passive owner becomes the most powerful voice in the room? At the heart of BlackRock's empire is Aladdin, a vast software platform. Aladdin is the company's central nervous system, monitoring trillions in assets in real time. It tracks investments, stress tests portfolios, and provides a comprehensive picture of financial risk. BlackRock licenses Aladdin to competitors, insurance companies, and pension funds. This gives BlackRock an unprecedented view of the market, like playing chess while seeing your opponent's pieces. If Aladdin's models have a flaw, the error could be replicated on a systemic scale. For the average person, Aladdin is invisible, yet it influences the world around them every day. Pension funds, insurance companies, and more rely on its calculations. The platform's risk assessments quietly shape the security of financial products millions depend on. It is the ultimate black box, understood by only a select few. The digital ghost in the machine is now managing the machine itself. BlackRock's reach extends into city halls and state governments through the municipal bond market. When a city needs to build or repair infrastructure, it often raises money by issuing bonds. BlackRock is one of the largest investors. This makes the firm a major creditor to American cities, creating a direct link between its financial decisions and public services. BlackRock's investment decisions can influence a city's borrowing costs and indirectly its policies. Municipal leaders may feel pressure to prioritize bondholder-friendly policies, even if unpopular locally. The priorities of a global asset manager can shape local decisions, whether a public pool stays open or a road gets repaved. The winners, investors who receive steady returns. The losers, residents who see services cut or taxes raised. The power is systemic, an unspoken understanding of who holds the financial cards. For millions, the dream of a secure retirement rests in the hands of their pension fund, and often, BlackRock. The firm is one of the largest managers of pension assets in the world, a silent custodian of retirement promises. Pension funds hire BlackRock to invest for steady, long-term growth. If BlackRock's investments perform well, pensions remain solvent. If not, shortfalls can force tough choices: higher taxes, service cuts, or reduced benefits. The sheer size of BlackRock means the retirement security of millions is concentrated in one entity. A strategic error or shift in philosophy could have widespread consequences. The people whose futures are at stake have no say in these decisions. They are passive participants. The concept of a pension becomes an abstraction, a number on a statement. The intricate web of decisions that determines that number remains hidden. The fate of millions is intertwined with the strategy of one company, a predicament most are unaware of. BlackRock is at the center of the climate change debate. As the largest investor in many major oil and gas companies, it holds significant influence over the fossil fuel industry's future. CEO Larry Fink has called for sustainable investing, warning that climate risk is investment risk. BlackRock has launched green funds and pushed companies to disclose climate risks. Yet, it remains one of the world's largest investors in fossil fuels. Critics argue its actions don't match its rhetoric. True leadership would mean divesting from polluters, not just engaging with them. The conflict: BlackRock's duty is to maximize returns, and fossil fuels have long delivered. A rapid shift to green energy could cause short-term losses. But sticking with fossil fuels risks long-term consequences. BlackRock is walking a tightrope between fiduciary duty and sustainability, with the world watching. How can a force so large remain so unknown? BlackRock's low profile isn't just strategy, it's also our collective choice not to look. High finance is complex and intimidating. It's easier to tune it out. We trust experts and institutions to manage the system because confronting its scale is overwhelming. Acknowledging that a single company has more financial clout than most nations is unsettling. We focus on what we can control: our jobs, families, communities, while the abstract forces of global capital remain distant. We see the effects: factory closings, pension cuts, rising prices, but struggle to trace them back to their source. The true architects of the system remain out of focus. The question isn't whether BlackRock has hidden itself, but whether we have chosen not to see. The ultimate challenge: will we keep looking away or finally confront where power truly lies? We now stand at a unique moment in history. The concentration of capital and influence within a single private entity is unprecedented. BlackRock is not an evil empire, but a rational actor in a system that rewards scale and efficiency. Its story is the logical conclusion of decades of financial consolidation. The future of this power is not yet written. Will it bring stability or new risks? In a democracy, power is supposed to be accountable. But who holds BlackRock accountable? The story of BlackRock is about the nature of power in the 21st century: quiet, algorithmic, and systemic. The ultimate question: now that we see this power, what will we do about it?